What's up, everybody? Welcome back to the Wealth Not Wait channel. I am your host, as always, Joseph Kaweza, and on today's episode of Making a Mogul Season 2, Episode 2, we're going to start the breakdown of each Landa property. So again, I'm going to be mixing in with a variety of videos, learning and doing different stuff. For this one specifically, we're going to be talking about Landa properties, giving my personal opinion, and this is in no way some kind of, I think this is a definite, I'm some kind of expert, nothing like that. I am someone who's an enthusiast, I'm learning. You may know more than me, you may be learning along with me. This isn't a definitive thing, and different situations may work for different financial stuff. I really want to stress that, and that this is my own personal opinion. It's not financial advice, it's not a guarantee that you need to do this. I really want to make it clear that this is my opinion on it, here's the things I'm looking at, and trying to give an alternative opinion and as much data as I can so you can make strong financial decisions and improve your life overall. So, jumping right into it, we're going to start off with the Georgia properties, and then we're going to get into New York ones later on. I'm thinking that's the kind of way we're going to do it. So, of the 49 properties, this one's off by itself in Covington, Georgia. This one is 45 Robertford Drive. Just kind of looking at it, the first thing we're going to talk about is what it looks like. A lot of these Landa properties have good photos, but some of them just don't look like they've been fucking washed. Like, I've seen one, the whole side of the house was just covered in dirt. Like, you wouldn't fucking pressure wash it beforehand. So the eye appeal of it, when a resident comes up and thinks about renting it, when me as an investor looks at it, do I think my money is safe here? If the place looks like shit, I'm going to say to myself, if I was a resident, I probably wouldn't want to live here because the place looks like shit. So just kind of looking at it overall, this house, it looks nice. I'll put, again, stuff on the screen for it. It looks like a family home. You know, nothing super crazy that stands out to me, kind of zooming in on it. I see there's some stains in the driveway, but I mean, it's a driveway. You know, there's going to be some stains occasionally. The roof looks nice. The house itself looks nice. The paint, everything looks pretty good. The lawn looks well kept. The house overall, and you kind of tell in the neighborhood and the background and all that, the house overall looks really good from the outside from this view. Looking inside, we'll talk about it again, but there's a separate shower and bathtub, which is awesome. That looks really nice, and it's recently renovated, which is a good big bonus. That looks really cool. Again, the floors, everything, the house looks clean. You know, a large backyard from what I'm seeing. Oh my God. So a large backyard, great for a family, great for kids, great for people who have some sort of animal or something along like that. You know, a dog, and you can roam around. You have good floors, carpet. The house itself looks good. Overall, kind of flipping through it. Upstairs, so 2 different levels. That is, I believe, we have brand new appliance, brand new stove, which stands out with the blue and the white. But I mean, it doesn't look bad. It's just interesting. Brand new, so you have some new appliances. Hopefully, again, the rest of the appliances work. But a new appliance, again, moving in of the stove. This looks nice. There's like a fireplace, the hardwood floors. Overall, this house looks pretty good. So the picture test, I'm really thrilled with. It's 5 beds, 3 baths, which is fucking awesome. 2,000 square feet. So the next thing we're going to look at is the market cap. So going over to Zillow is what I'm going to use to find the price estimate. If you guys have something that you think works better as far as price estimates, please let me know. So as far as Zillow though, putting it in, it's off the market, of course. This one says 4 beds, 3 baths, which I know Landa can kind of take a little bit of leeway sometimes with how many beds there are. But 4 beds, 3 baths at least. This one says that the estimated price is $336,500. That's about what they paid for it. Right now, the market cap is $348,098.57. So it looks like, and then we're going to scroll down. We're going to get to the rest of it in a second. But overall, versus the price of it, it looks like they didn't overpay for this house. They didn't overpay a ridiculous amount, and now it's fucking underwater because the house is worth significantly less. That's something I also want to look at, especially for an investment, is am I putting money into it? Is it going to be, okay, cool, well, they bought this house for $600,000, and now the house is worth $300,000. Like, cool, I'm going to make my money back from the residents, which is, you know, cash flow and it's a goal. But if, God forbid, this goes out of business, so they sell the home or whatever, if there's a tornado or a fucking hurricane or whatever, am I going to get my money back from it? I don't know how all that would work through Landa specifically, but if the value is still significantly less than what I'm purchasing it for, the estimated value, it's like buying a business. If you ever watch Shark Tank, people evaluate their companies at $1 million and they have like fucking $2,000 worth of sales and they sold like 16 things. It's like, get the fuck out of here. It's not happening. Same thing with this house, same thing with stocks, same thing with anything, any type of investment. You want to make sure it's properly valued. So, looking through it again, it says recent renovations and upgrades including new architectural roof. The roof does look nice, that's something I noticed. Water heater, kitchen, again, kitchen looks great. Baths look great. Flooring looks great. plantation blinds throughout, and fresh new landscaping. Landscape looks great, so it looks like they really put in a lot of work. Either they themselves, Landa, I don't know how they worked that out with their companies, or whoever was selling this house did a really great job beforehand selling it. Master suite on main with garden tub and separate shower. Teen suite upstairs, which you've seen, with a full bath. 2-car garage with pull-down attic access, convenient to shopping and restaurants. So that's really good. That's great for a family, great for people with older kids, great for people with younger kids, great with people with pets. This has a lot of versatility. So look at the property features and details. This is 5 bedrooms, 3 baths, which it may not be 5 bedrooms, it may be 4, depending on what we got. 2,000 square feet, and the year built was 2002. So compared to some other houses, still relatively new. So going down further, recent updates, it's been collected. They paid a late fee, so they're sometimes a little late, the current resident. Rent collected, late fee collected. It looks like they're pretty consistently late with their rent. At least these past couple, January and December, maybe they lost their job, maybe something's going on. So that's not cause for immediate concern, but that's something I'm seeing. The current share value is $16, so compared to some other spots in Georgia, it's pretty decently high. You're kind of approaching the New York area almost with the low 23s and some 30. So, but there's not a lot of fluctuation. I don't think they're trading currently. I think you just buy into it, yeah. So there's nothing really crazy going on with that. As far as the property economics, it had 11 cents dividend. So that's how much that was paid to its shareholders in the month of December. So we're going to go through, we'll just look at loan payments, insurance, property tax, nothing crazy. So we're going to go through, we'll do the hot math on it. You have 11 cents a month times 12 months equals $1.32. So $1.32 divided by 16, and then you times that by 100 to get your percentage, you're at 8.25%. So overall, really not bad as far as the payment and what you're making in interest compared to your initial increase. And then if the price goes up, of course that has something with depreciation, but really not bad at all. I kind of aim for around 10%, your 9s, 10s. This may be within the range of something. If I don't like a lot of other investments, this may be something I invest in, like personally for me at least. So going back to it, it's a single family home, so I believe it's then 10,000 shares, not 100,000 shares. But again, it doesn't really look like it's trading too much anyway. The rent is $2,203. That's my apologies. The lease expires in June of this year, and they've lived here for a year. So not a long-term resident, but they've lived here for a little bit, and it doesn't expire until the summer. So that's pretty good. Looking at the rent, I also want to make sure something is that they're not charging an exuberant amount of rent. If somebody can find a better deal elsewhere, they likely will. Same thing if they're charging drastically below market cost. Obviously, you don't want to have somebody have a good deal and live somewhere, but if they're charging, $100 and they could get $2,000 for it, something ridiculous I'm just looking at, maybe up it a little, I'm just saying in that situation, maybe bring it to 500. You got to figure out, especially when it's a company who has shareholders, you want to increase profits, but you don't want to fuck somebody out of their rent. So looking at, especially if it's a family or something like that, and you can tell they're already late, so maybe they have problems paying the rent. You don't want it to be too exuberantly high. This can be something that tells me, hey, maybe the rent's too high for the area. So the person's general income maybe doesn't match up. But let's see. So for 4-bed, we're going to assume it's a 4-bed. That's what Zillow's telling us. That's what even though it doesn't say 4-bed, it says 5-bed, we're going to assume it's a 4-bed. So bringing it, we went to Zumper.com, and that kind of tells us the amount of rent in Covington, Georgia. Currently 60% renter-occupied households, 40% owner-occupied households. So more people are renting than owning, which could be a good thing if a lot of people are renting. There's a lot of people, high demand in that area, which is really good. So if somebody moves out, it'll low downtime than to move in again. So 4-bed, we're at approximately $2,055 a month for rent for a 4-bed, and of the current price of $2,203, that's pretty good. It's about market average. So you're about, $150 over, which overall with 3 bathrooms and a nice house like that, I think you really could get that extra $150 for it, especially if it's a family. So I don't think they're charging a exuberant amount over market cost for rent. So we're going to look at the financing of it. It's going to be 53% loan value, so they have more debt to equity, which, if they own the property outright, that doesn't mean, that limits the amount of the bank coming and taking it back. So interest rate is 4.8%, at 5 years, so not horrible, not terrible for it. More debt than equity, though. That's something. But with homes, yeah, this could be expected. I like more equity than debt, but again, with a home like this at 53%, that's to be expected. $7,348 in cash balance, which means if something goes wrong, water heater breaks, or this, or a fucking ceiling caves in, or something crazy like that, this is how much money. This is usually something not insane, but something that like they got to repaint, they got to do this, they got to do that, simple maintenance, water heater, pipes, whatever it is. $7,348 left in cash to use that before then it starts taking away from the dividends and potentially going negative. So a high cash balance that they could use for repairs and stuff like that and for maintenance. Look in the property account transactions. It's going to give me the whole list of it. Let's see. So rent payment, late fee, rent payment, investor payment, late fee. So they're just late these past 2 months. So maybe something happened these past 2 months, Christmas, the New Year. Maybe somebody got sick. That's something that's easily excusable. Rent payment, property tax, loan payment, insurance, loan payment, late fee again in November. So now we're starting to get a little consistently late. Investor payout, property tax, nothing to be done as far as maintenance yet. Late fee in October, so they are pretty consistently late with their rent. Rent payment, investor payout, property tax, insurance, late fee in August, so they did good in September, no late fee. Property tax, insurance, nothing crazy. Late fee in July and late fee they paid 2 in July. It looks like they got 2 late fees. But before then, they were okay. So recently, they've been consistently late. Not great. They haven't submitted any requests. They haven't had issues, so it's not a maintenance thing. It seems like it's more of like their personal, this person who's renting it, more their personal situation. Again, maybe they lost their job. Maybe they have a hard time paying their bills with stuff. It's something that definitely I should keep an eye on if you were an investor and kind of look at and think to yourself, well, do I trust them to make the payment? Am I going to get the money on this? But it really doesn't look like there's a major issue. And again, especially if it's a family during, possible economic recessions, that's not the end of the world right now, at least in my mind as an investor. It's something that I'm definitely taking note of. I don't want to make it sound like it's absolutely nothing, that they're consistently late. But it doesn't really sound like a major issue at this point in time. So, and then it kind of gives you the general idea of it, kind of the area, Taylor to Eats, Willow Creek Estates, just kind of things near it. Some churches. We're going to look at also something I find that's important, especially if there's a family, from what it seems like, is the crime rate in the area. So the current crime rate in Covington is actually pretty decently high comparably to Georgia and the rest of the United States in that area specifically. So kind of zooming in on it, it shows the area here, Covington. Let's take a look. We're going to exit out of this property real quick, and we're going to zoom in. So it's Covington. It's like the top left there by 162. Yeah, you're looking at like this area here. So Benedict Place, Countrywood Estates. So yeah, it's not horrible, but it's a decent crime rate in that area. At least again comparable. So comparing to what they're showing, it's an 8, 100 being the safest, so it's safer than 8% of U.S. cities. Again, not great. 70 violent crimes, 429 property crimes, 499 total. Crime rate per 1,000 residents overall is 34.67. So violent crime rate is higher than in the Georgia average overall. Not great. Chances of being a victim of violent crime, oh wonderful. I'm so happy that they have this. 1 in 206. If I lived somewhere and I looked this up, I think I would that's how people fucking have problems. That's how people stay inside all day, is because they have stuff like this. Not that that's a good thing. I mean, it's a good thing you could check it, but just like, I imagine people looking at this and being like, I'm living here? So population in Covington is 14,391. So pretty decent pop, not really super small. Overall 3.96 for assault percentage per 1,000. So some are over, some are under as far as the crime rate. Again, not super great, but overall it doesn't look like a huge issue in that area. At least then comparably to the rest of the United States and Georgia itself. So the final thing we're going to look at as far as this property overall seems pretty good. I don't want to call it just yet, but I'm going to look at the documents, see if there's anything in there that I would find interesting. And it takes forever. Subscription agreement, management services, just your general stuff. So it doesn't really look like there's anything crazy. I didn't go through all the documents and look at it, but overall it looks pretty good. As 45 Robertford Drive, Covington, Georgia, it looks pretty decent. It looks like a good investment. It looks like that if you have an interest in it, I highly advise looking through it. But overall, it looks pretty good and pretty solid. It's about 8%. It could go up, it could go down, but about 8% of money on your return as far as the initial share price. This share price relatively to Landa is a little high at 16, but there's a family that lived there. I think a family that lives there. It looks like a great area. The house itself looks like pretty good. Not a crazy high crime rate. It looks pretty decent, but they do have problems paying their rent consistently. They're collecting the rate fees and they're paying it, but they do have some problems paying their rent consistently. Again, in this market, that's not necessarily a crazy thing. All the metrics are good though, and the crime rate is a little above average. So just with those general factors, I would say it's pretty decent. I don't have a rating system for this yet, like an A, B, or anything like that. Maybe I'll come up with one. But overall, I do feel this is decent. This wouldn't be my first pick of investment property, but overall, I say it's pretty solid. And hey, maybe something I look into later on. So if you guys like this video, make sure you like, comment, and subscribe. And let me know in the comments below if you're looking at this property, you're looking at other properties, what's your opinion on it? What's some other metrics that you look at? Maybe some websites that could use to help find good metrics for this, and anything of that nature. As always, I'm Joseph Coiza, and I'm here to help.